Hello and welcome to Pro Trader Strategies market commentary for Monday, March the 30th. Hope everybody had a great quarantined weekend. A lot of very creative ideas coming out on social media and other places for people to kind of get together. It's pretty interesting to watch. Anyway, I'm here to talk about different ways that we can take what we come up with by looking at the economic data, the geopolitical and market analysis, and then base that on a market assumption, layering on top of that some option strategies that I find that can be implemented into a portfolio in order to increase that yield. And right now, that's probably one of the most important things to be trying to do. And I've talked about this in implementing options into our portfolio webinar course, which is what we are going through right now. The timing of it hasn't been hasn't been any better, let's just say, over the course of the years that I've been doing this. Everything is lining up quite nicely with the way that the course is versus what is going on in the overall market. So you should take that opportunity to check those out as we are going through this course right now. So anyway, without further ado, let's get on with the economic data and talk about that, albeit it is, such a lagging indicator at this point. We've talked about this before with the economic data. It is a lot of times lagging indicators. We like to look at the forward-looking ones. But right now, with everything that has changed so rapidly, that some of these economic data points are really not really worth the water that they're in or whatever. I don't know what a good analogy is right now, but they just aren't worth their weight, I guess, is what I should say. All right, so nothing really across the pond, and we don't usually get a whole lot of economic data on Mondays anyway, but we did get pending home sales, and that came in at 2.4%, expected to be a negative 1.8%. So that's actually pretty good. We're seeing this happen during all this turmoil of the coronavirus. Some of these numbers are going to be reflective of that with the low interest rates. I've talked about this, refinancing and things of that nature is probably a really good idea, especially before we start seeing credit crunches in the household going on. So a good time to refinance. This is pending home sales. It doesn't necessarily mean those homes are going to be sold. Some people could be pulling the ripcord on that based on current events, right? So, but that number pretty good, expected to be a negative number. And coming out of the winter, we're going to start seeing more and more people shopping for homes. Usually winter is the lull of that type of economic data point. All right, let's get on to the overall markets. Crude oil back into the 20 handle after testing the teens earlier today. 1985 is the low there, as we can see. But this rebound is happening based on Trump talking with Putin and setting up a preliminary meeting to talk about the production of oil and things of that nature, to try and get a little bit of buoyancy going on here in these crude oil prices, as it is hurting a lot of businesses at these levels, a lot of the oil refiners and stuff like that, especially here in the United States, where their break even on overall production is upwards of 30. For fracking, it's up in the 50 area, like right there at 50. So the United States companies are struggling right now, and that is something that they don't really want to happen. For us as a consumer, it makes it a lot cheaper for us to get gas into our car. That helps us create some velocity of money because that extra money might be spent elsewhere. But, we got to also think we're all quarantined, so nobody's really driving around or doing anything. So we're not really consuming that product despite the fact that it's at extreme low levels. So not really helping anyone anywhere at that point on these crude oil prices, it seems anyway. Gold is coming off as we're starting to see some movement in the equities to the upside after overnight was pretty negative sentiment, as most people were talking about the coronavirus and how it was continuing to spread in New York, and Louisiana is another bad area. So we are starting to see a rebound that's given crude oil a little bit of difficulty to the upside. As you can see here, we are down about almost $12.50 on the precious metal. And then we have the bonds starting to move a little bit higher here, up just over 2.5 points on the day. That means, keep in mind, this is what I'm talking about when we're talking about those pending home sales, people taking advantage of these low interest rates. Well, when interest rates are going down, that means the price of the bond is going up. And we talk about this before too, where we have like a teeter-totter effect, right? And as the price goes up, all right, as price goes higher on the bonds, meaning this price starts going up that way, then that means the yield on these goes down, all right? So that means interest rates are going down. So total teeter-totter effect on this as we're talking right now. So a lot of people taking advantage of those extreme low interest rates on a 30-year bond, you guys. So that means the lowest levels we've seen on interest rates to go out and buy a home. So that means more of your money every month is paying off principal rather than on the interest rates. Very attractive scenario there for the home buyer. So that's why we're starting to see some of those prices or some of those pending home sales go up. Now, some of those people might have gotten laid off. We're talking, they're saying upwards of, we were at the lowest unemployment in historical terms. And now we're starting to see, well, those unemployment rates could go upwards of, 20% of people unemployed, 20 to 30%. And more companies are talking about furloughing their employees and laying off more and more workers. So Macy's just said that they were furloughing all of their employees as they are seeing no one in the stores. All right, so VIX is coming off, and that's typical when we start seeing the equity starts rally. You can see Dow Jones Industrial Average. This is the futures, up almost 500 points on the day, very well near the highs. You can see on the open we were probably 1,000 points lower from the open to now, where you can see the low here is 20,778. So we're talking another about 1,000 points lower on the open from where we are now. So a nice big rally, continuing that mantra of 1,000-point moves in the Dow Jones Industrial Average. Here we have the Nasdaq really blasting off, up 238 points on the day, very well close to where we opened on Friday and then had the big sell-off. But you can see Nasdaq open right on the 9-day moving average. And I've talked about this. I do expect us to kind of continue this where we're going to bounce in between these Fibonacci's right here, which is right around this point of control, right? That's where the most time and volume has been spent. So it's a comfort zone for the last 52 weeks anyway. This is really showing people that, this is where I bought or sold. I'm not really up or down any money. Yes, we are down money for the year, where you're going to be looking at the January move right here to here. Yes, your portfolio is down in value from there. But overall, where you're looking at your statement, and yes, I bought XYZ stocks at this level, and I'm not really losing money from where I originally bought them. I did lose some paper value where I saw it at the highs and it looked great. But right now, you're kind of back at that point of control where it's going to settle down a little bit unless something major starts to happen. I think we're going to kind of bounce in and around that area. I don't think that we're going to necessarily test those lows. I think that is pretty well priced in unless this thing really blows up, and I think that the market has kind of priced in worst case scenario at this point. So everything else should be, like if the economic data points start coming out better than what we were expecting, then those are going to be really celebrated going forward. E-mini S&Ps, similar situation here, up 70 points, almost 3% on the day, near the highs of the day as we speak, and trying to engulf that red candle we had on Friday, which just really sold off into the end of the day. I mean, it was like a free fall at the end of the day as nobody wanted to hold any stocks going into the weekend, it seemed. So we can see them making that move higher. We can even better see this on the daily chart. As you can see, this is a 30-minute candles. Friday, this is what I was talking about. Literally took all day to grind to the highs of the day, and then in a matter of 30 minutes, we just completely fell out of bed, just fall on our faces to the lows. That created that candle that was looking pretty bearish, to be quite honest. Anytime you get a red candle basically halfway engulfing a positive candle, that makes it look pretty bad, especially with the volatility we've been seeing. But as we opened on the overnight trade, you can see we opened up right down about here and have done a pretty nice move to the upside and trading near the highs of the day. So a little bit more work, it seems, to get up to those highs we saw on Thursday, but it is possible that we could start grinding higher, and then I think we're still going to see some volatility back and forth. But with that being said, I took a couple of opportunities to look at some trades here. Lululemon, now I haven't gotten this trade. I played around with it, and I feel like I've been chasing it all morning. When we had a bit of a sell-off, I was trying to sell some puts in here, because even if it hangs out at around the point of control, I think I'm going to do all right. Now, you're saying, well, Lululemon's a high-priced kind of retail instrument, if you will. I don't have a whole lot of retail in my portfolio, so I decided I was going to try and add some of this, maybe Nike or Lulu, but I felt like Lulu is more of a higher end item, and those are the consumers that might be able to weather this storm a little bit better. So I decided I was going to kind of look at Lulu for selling some of these puts, because I think that they still will do all right. Sell some puts in there. If I get put the stock, then I'm good with that. And if not, I get basically a dividend from Lululemon on it. So right now I'm trying to sell the April 135 puts in there, which you can see the 135 puts is way down here. Very near those lows that I talked about. I don't think that we're going to necessarily retrace to, especially on something like Lulu. I think those worst case scenarios are out of the way. But I haven't been able to get my collection of credit, which I was trying to get $1.24, and it looks like it's trading about $1.15 now. So I don't know if I'm going to chase it too much more than that. Hopefully we'll get a bit of a sell-off at one point and I can get clipped on those, but I'm not chasing it anymore at this point. And then DAL, Delta Airlines, you guys remember I'm long this, trying to stay mechanical with it and lower my overall cost basis on it. And on one of those original sell-offs, I sold some calls against my synthetic long that I have in here. And I sold the April 39 calls in there. Sold the April 60 calls in there. Originally for, let me double check. I forgot to look what I originally got those for. Sold those 60 calls for originally April 60 calls. Come on, where are you? April, sorry about this, guys. 52 cents. Sold the April 60 calls for 52 cents. Bought those back for 3 cents. Again, just trying to lower my overall cost basis on my longs that are still quite a bit higher. It's up near the $55 area, which you can see about 50% discount from where I've done that. But overall, continuing to stay with this trade and lower my cost basis on it. You know, I mean, I've been in this trade for quite some time, and I've sold the February 64 calls in there. I sold the February 63 calls in there. I've sold the February 59 calls. As that market comes down, I was able to cover those for, you know, pretty cheap. And then I've sold the 45 calls in there. So overall, it looks like I've lowered my overall cost basis by close to $3 on this. Guessing, you know, just trying to do the math in my head really quick. So lowering overall cost basis doesn't give me, you know, it's not giving me a whole lot of solace because I'm basically up there at the 55 long, but I'm going to continue to lower my cost basis on this trade and try and stay with it a little bit longer. I also had sold the April 39 calls in there that I sold for 90 cents. Now that was just based on a trade. That I had already had the covered calls at 60, right? Well, I sold the 39 calls, a little bit bigger than I even owned in the stock. So more of a trade in there, and I was able to sell those for 90 cents and 96 cents and bought them back for 46 cents today. So that being a trade, covered that for 50% of my max profit on that. To stay with my rules. It's not along the lines of the covered call strategies. That's why I'm milking those out to be like 3 cents, taking the full credit because I'm trying to lower my overall cost basis on that. This helps with lowering that cost basis, right? But because it was more of a trade to the downside, I stuck with my rules on covering at 50% of max profit for that. And then with we go over and look at Facebook. This was also a covered call that I decided to take off, and I had originally sold these April 200 calls. Goes back further than that. Let's see. These are my February, 190 calls in there. So I covered my February, no, I added this trade to my long position. So I have a long position in February, trying to figure out what I've been moving and shaking today, canceling and replacing a lot of trades, trying to decide what I want to do, I guess. No, that's true. So February with Facebook, if you guys remember, way back, I had sold some Facebook puts at the 175 handle in there, and I got put that stock, so I'm long Facebook at 175. I covered the calls on that, selling the 190 calls today for 35 cents. So again, trying to stay with that mantra. When I'm long stock, I got put this stock, and just trying to lower my overall cost basis on it by selling those calls against it. If you remember, I got put that stock at 175 and trying to lower my overall cost basis. I had sold some 142 puts, bought those back for a nice profit, sold some 200 calls against it, bought those back for a nice little profit, basically making about 90 cents there. Now selling the 190 calls for 35 cents. That will lower my overall cost basis on this trade by a little bit better than $1. So I'm long at 175. So my break even on this is about 173 and a half, let's call it. All right. 173.75, I'll say. All right. So lowering that overall cost basis. Obviously, this trade's still against me on this long in Facebook, but again, we're just low. Our idea is to continue to lower our overall cost basis. Now my cost basis is right at the value area low there, right? So the market wants to migrate back to that point of control, especially in something like Facebook, where I'm still bullish in it because I think that everybody is sitting at home in quarantine and going to be Facebooking, and that's going to do very well for them with the ads and everything else that are going to be going on. All right, so that's all I got for you guys. Got a little bit long-winded today because we had a lot going on. But trying to stay mechanical. Check out my webinars at protraderstrategies.com. And please take a moment to go over this disclaimer as we talk about we are an educational company, and everything that we talk about in this webinar is not a solicitation to buy or sell any of these products. I'm not here to try and give you guys trade recommendations. I'm here to talk about what I'm doing, and hopefully that relates to something that you might be doing and able to implement these strategies in your portfolio in your own way. All right, that's all I got. Other than if you can't take that, take it easy.